Alrighty, folks, we have the most dynamic duo back with us. We have Ken and Daniil McElroy. We talked to them about a year and a half ago. We talked about multifamily, extend and pretend. We talked about single family, lack of inventory. They have an amazing event coming up at the end of July, July 31st and August 1st, we will talk about. But before we get into that, I actually want to start with a tweet that Ken McElroy sent out this morning. How you guys doing? How you doing, Daniil?
Great.
All is
Awesome.
well, man.
All is well. Well, Ken, this is a tweet. If you guys aren't following Ken McElroy on Twitter or X, you guys are truly missing out because he just puts out these pearls of wisdom to make you think. And here's the one from 4 hours ago. It says, freedom isn't a number. It's not 1 million. It's not 10 million. It's when your passive income covers your life. Most people know how much they make. Almost no one knows how much they spend. That is the gap. I agree with that 1,000%.
Yeah.
And I just don't get it, Ken. What's going on?
Well, I think it's interesting, Michael. Like we're real estate investors, so we're kind of forced to look at income and expenses on deals, right? But if you don't do that, most people don't do that personally, right? They don't actually know the number, and so when I first started buying my very first unit, I didn't do this either. I knew that it cash flowed, but then I was like, okay, all I need is like 15 more of these, and then I'm financially free. So that was and I think that's kind of how I thought. And as you guys did that some time ago after your trading days way back. But like once you get there, you realize how much freedom that you have, and that's really what I mean. Is it's not a number. It ends up being a number, but it's your number. Like it's
exactly
it's whatever you want it to be. Because people, I think the other thing is people think success is dollars. It's not dollars. It's time. It's time and family and health.
Yeah, I agree. One of the things, one exercise I've had people do at various events is I've asked them with their kids to imagine 3 different lifestyles, right? I want them to imagine the lifestyle they have today. What does that cost? Let's say, for example, $5,000 a month. Then go with your kids and family and figure out what the bare minimum was. Like if you had to like cut out the 3 streaming services and all this other stuff, whatnot, $3,500. And then, oh, by the way, let's ball out. What's the most fancy lifestyle we could ever have? And let's say it's 20 grand for this conversation. All 3 of those numbers are awesome, but you got to know what your number is. And then it becomes like the North Star. And oh, by the way, if you do this minimum, base, extravagant, you actually have 3 numbers, so you can just take this whole journey to. It's a lot of fun. Daniil, when you think about income, expenses, discretionary income, getting into the single family game, did you think about this naturally? Like how much money am I saving and all of that?
I actually did.
Nice.
Once I got into investing for cash flow, I'm like, okay. And this is still my investment strategy today is, once for me, it's more of like a retirement thing. So I'm like, how much do I want a month to retire and not have to work anymore? And then how many rentals do I need to get there? Assuming that for me that they're paid off, but because that's kind of my goal by the time I retire. So it's all just working backwards on math. And the nice part about real estate is it moves with inflation. So I don't necessarily have to worry that money is going to be different than it's going to be in 20 years, right? Because it's going to move with, what the current value is.
Yeah. Inflation is a feature, not a bug. I wish more people understood it and even more people invested like that. Because if you invest like that and you get a big enough asset base, maybe think snowball, the momentum just builds on itself. You can't help but let your asset base grow. And pretty soon your asset base grows faster than any necessary income. So it's pretty cool. So let's step back and talk about a couple of deals both of you have done. We'll go to Daniil first here. I understand, Daniil, you just executed a 1031 where you exited one property and got into another. What's up?
Yes, I did. I got out of a condo. So I had this condo. It was the first thing I ever owned. I lived there. And so obviously when I bought it, it was not meant to be a rental. But it was, and it cash flowed great, right? Like my rent was $1,900 a month. My HOA was $200 a month. I didn't have much debt on it. It just, everything was great about it. Fast forward to 2025, my HOA is now over $300 a month. My rental value is down to $1,600 a month. So I'm now barely cash flow. Like I'm cash flowing, but I'm cash flowing like $500, a month. Right.
Mhm.
So Ken was like, you really should start to look at these numbers because I had, the condo was worth 300 and some $1,000. So 300 and
Okay.
some $1,000 is cash flowing me, $500 or $600 a month. It's not a
Yeah.
very good return on your money, right?
That's like 2% or 2.5%
Yeah,
or something.
exactly.
That's
Like
not good. That's
it's
not
not
good.
good. And that's probably not even accounting for, repairs and all these other
Right.
things, right?
Yeah.
So I'm like, this isn't great. But I also couldn't really charge more for rent because of all the
Mm.
new Class A single family investment in the Phoenix area. So now my
Yeah.
B property is really unappealing and I need to lower rent.
Mm.
And there's multiple units in the complex that are listed for rent as well. So I'm
Yeah.
like, okay, I'm going to try to get out of this because I also invested in another neighborhood that's 20 minutes north of that. Single family homes, 2 bed, 2 bath, 2-car
No
garage,
HOA.
yard, right? It's about 150 grand more than than this place, right?
Okay.
So I'm
Yeah.
like, I'm going to see if I can sell it. It's not the easiest time to sell, but I'm going to price it to sell because I have a lot of
Yep.
equity. I bought it for like 160 back in the day. So I'm going to
Right.
price it to sell and I'm going to see what happens. So I price it to sell, it sells, and I buy, this single family a little bit north. Now this single family cash flows about 1,400 a month. So I increase my cash flow almost $1,000 a month and only for $150,000 more. And I actually think I could have rented it for more. I rented it for less because it was vacant. So I didn't really have that buffer of somebody giving me notice. I kind of just wanted it rented. So I think
Yeah.
I actually could get a couple more $100 out of it in a normal, when I have time kind of cycle.
Yeah, that's a wonderful story, and more people should consider that, especially if like you're in an HOA, because not only do you have the HOA that goes every month, but sometimes in Florida, for example, they're seeing all these special assessments and things come their direction. So moving into an area that you're farming, right? You have other assets there, you know it well, you get scale there, you get economies of scale. Your team is
Yeah.
there. I think it was a genius move. Nice work.
Well, and plus too, what people don't realize right now is sellers are negotiating. So when on the buy, I found 3 properties I liked. Ken laughs at me because I had 45 days on a 1031. I get, stressed out. So I'm negotiating while I'm still in escrow on the other property, right? But I just told all 3 properties, I said, listen, like they had all been listed for a little bit, not long, like 40 some days. I said, listen, I'm going to buy this. I'm going to buy one of these 3 deals in the next week. Here's my offer, take it or leave it. And one of them took it. And that's it.
Yeah.
And it was a great offer, right? And I got it for a great price. But and I got some concessions too, but sellers are negotiating right now and you can't be afraid to ask. And, I just think people think it's such a bad time to buy, but you have so much power right now as a buyer.
Oh, yeah, I love that you're living this example. I call it disrespectful offers. I love buyers markets. I've been doing this 25 years. I've lived through 2 or 3 buyers markets, depending on how you count them. And these are the times you can truly get deals of the decade or even deals of a lifetime. But you've got to be aggressive. You've got to follow up. You have to have multiple options. All the stuff that you did there was leading by example. More people should be doing that. So congratulations. Ken, you've been putting out posts about buying apartment buildings. I thought I read somewhere you got a couple of thousand units in the last, I don't know, call it year or so. I know you picked up one in Henderson, which is like a couple of miles from where I'm currently living. What the hell are you doing? Don't you know it's a bad time to buy?
I know. Well, first of all, Michael, one of the things that you should always do, obviously I'm in the commercial arenas, right? So we want to buy when things are disruptive. So what does disruption mean? Disruption means high vacancy, concessions, flat rents, high expenses, high interest rates, all the things that you go to a seminar, you're not going to learn, or you go to a book, you're not going to learn. They're like, this is how you buy. Well, it's really, if you want to get a great deal, you got to buy when all that stuff is red, right? So, so we started really looking late last year. We did buy the Henderson project. We bought a couple more here. We just closed on a $97 million deal in North Scottsdale 3 weeks ago. And why would I do that now? The reason I would do that now is because of all those reasons. What you want, if you take a look and you fast forward out, let's say 1 to 2 years, we're already seeing rents stabilize. The reason the markets are unstable, let's say right now, is because of the new construction that started 2-3 years ago when rates are low. That's all moving through the pipe. That'll all be absorbed. It'll take a while. Every market's different. You just start to just do the math. It drops off like crazy when the new construction stops. You're going to start to see rent growth again. And then the big difference here between 2008 and now is, as you know, we both went through that. In 2008, there was a lot of single family markets or single family homes on the market, millions up on
4
the
million
MLS
active listings.
4 million. Yeah. Today there's not, right? And so
No.
you have this big issue with high pricing on homes. High, I don't think 6-7% interest rates are that high, but I guess a lot of people, if you started in the last 5, 6, 7 years, you think they're high. But regardless of that, the mortgage payment on those is high compared to rent. So what we're seeing is we see a lot of people being pushed into the rental side. So I see things moving, affordability problems, moving people into rentals. I don't necessarily agree with it. I actually believe in a balanced market. I have young kids, as you know, in their 20s, and I want them to be able to afford a home. They can't, just like everyone. And so anyway, I'm just taking advantage of the way the winds are blowing. And so we've got this unaffordable time, disruption in the apartment market, syndicators in trouble, loan maturities, all that stuff. And so it's a really, really good time to sharpshoot.
Yeah, I want to poke at that just a little bit more, because what I see as an outsider, right? I think the big boys, yourself, Grant Cardone, Jonathan Gray, right, Blackstone, you guys are already active in taking down Class A assets, arguably somewhere between 20 and 25% off, which means you're buying it right and you can hold it for the cycle. But I am curious your thoughts on Class B and Class C, probably stuff you haven't looked at in years, but that stuff's frozen, man. That's not trading. There's still a bunch of extend and pretend. And really what I want to ask is I'm thinking if Class A got a 25% discount, isn't it reasonable for, somebody who does play there to think it might be 40 or 50% off when cap rates adjust to more equilibrium, or am I just crazy?
No, I don't think you're crazy at all. I think what everybody understands, like a Class A would be something new. Class B would be maybe 90s. Class C would be 80s and prior, let's say, generally.
Yep.
Those are big categories, but generally that's kind of how that works. So when Class A gets repriced down, you're actually competing on yesterday's Class B prices, right?
Yep.
And so that's the issue. And so then so the Class B properties, they're way underwater, right? When you look at the loans,
way underwater.
Yeah, they don't have any equity. So yes, so it's very interesting time where you're way better off to buy a Class B or a Class A under the replacement cost that cash flows versus a Class B that's already been value added. That's the other thing. Like if you're gonna buy because we just went through a huge value add stage, right? A lot of people just did value add. Well, so when you look at this, call it Class B stuff, there's not a lot of meat on the bone, right? Like, how are you what are you going to do there? Like, you know what I mean? Like they've already gotten the washers and dryers. They've already got the new flooring. They've already got the new appliances that, they've already spent millions of dollars on the project. So it's not like you're going to go in there and really move the needle. And so that's the issue with the Bs right now.
Well, and that was even the issue with my unit, right? Because I can't vault the ceilings. I can't, make the bedrooms more spacious. I can't make an open concept. Like, I'm trying to compare my unit to some of the ones that he's buying and building. And it's like, it's never going to compare. And then on top of it, these new builds have like 2 months concession that I have to compete with as well.
Yep. You're right. Yeah, they're giving move-in specials and stuff. So I guess it's fair to say that there is still a lot of opportunity coming in commercial when banks have to eventually take the losses, right? It's just
my gosh. I'll tell you what, I got a deal 2 weeks ago in Dallas. I won't mention which one, but it's basically 250 units. The loan was $25 million, and the syndicator had paid 40, so they had 15 in equity. 15 in equity and 25 in debt. And the
Wow.
broker sent it to me, and he said the lender will take 14. So that, which means the equity's gone, that the lender's going to take an $11 million write down. Now, I actually looked at it. And by the way, it's 35% occupied. All, you know, it's got massive problems. I love looking at that stuff because, you know, it might be a diamond in the rough. And this one I passed. I said, nope. I just hit delete and moved on to the next one. But the point is these are coming. And
that's 30. You know, that's 30. Just so people realize, that's 30 cents on the dollar. Yeah, right, 14 off of 40. Again, that I love this fact. This stuff is coming, and I even like the fact that you passed on it because again, you know more is coming.
I know. I did that in the last cycle. People thought I was crazy. I remember Ross and we looked at a deal in Arlington, Texas. Now the lender had it. It's already been through foreclosure and all that. And the lender's sitting on the lender's books. They said, "We'll give you this property. We'll give it to you. We'll finance it for you, and we'll give you $2 million to fix it." And I passed.
Wow.
And I passed because after the number they were going to give it to me for, plus the 2 million at stabilization, I was like, still not worth it because the lender, they're trying to not write it down very much. So, and that's what happened in this case. Believe it or not, it wasn't even worth. The lender should have written it down below 14.
Wow, that is crazy. Well, Danielle, let's go back to an area where most people can play. Most of us aren't superheroes like Ken and can play at the big dollar amount. What are you telling people? I mean, when I look at Scottsdale numbers, you know it much better than me, and I'll just say Phoenix for a broader area. It looks like inventory is up. The last chart I saw had inventory up at 2014 levels, right? Yep. Getting ready for this conversation. What are you doing? What are you telling people? Because again, I think a lot of people look at inventory and they just sit down. I think a lot of people are anticipate 2008 all over again, which, you know, they internalize as 50% off. That's just not in the cards. But what are you telling people to do today?
Well, you know, it's funny because, you know, my younger buyers that like are my first time buyers that have never bought a house before, I had a couple and they were like, you know, they're wanting to make an offer on this house. And I was like, I think it's, you know, a good deal. You know, it's been on the market 11 days. So are you sure it's a good deal? I mean, like literally, you know, and I had to explain to them, you know, average days on market right now are in the 60s, which, you know, it's really hard with buyers because if a home's been sitting for 60 some days, they think that there's something wrong, right? And we're just in this weird territory. So what I'm telling buyers now is, you know, now is your time to negotiate. Like I'm one of those realtors, you know, you were saying a disrespectful offer. I don't believe that's the case. And if a seller tells you your offer is disrespectful, then whatever, you know, who cares, right? Yeah. Because some people are going to take that, you know? So, but what I'm telling my buyers is now's the time that we make offers that things that are listed above the price point you want to pay and see if we can get them down to that price point. Now you don't do that on day 2 of them being listed, but if they've been sitting for 40 days, because the other thing is sellers are freaking out too. My home's been listed for 40 days. It hasn't sold. I need to drop the price because they're also not used to the market where things are sitting. So I think it's a great time to buy. I think buyers have a lot of power right now that they haven't had in years. And I just think that they need to, you know, the problem is they keep thinking it's going to drop more and it's going to drop more and it's going to drop more. And there will be a point where the seller or the buyers enter the market again. And, you know, they're going to be, you know, bidding and outpriced by a lot of investors.
No, they'll do what they did. I mean, I talk to people all the time that missed 2008, 10, 12, whatever year you want to put on it. And they just kept thinking it would go lower and lower and lower. And I keep telling people I bought houses all the way down. I mean, we started buying houses under 100K. The last house we bought was 28,500. And I still had people telling me it was going to go lower. And I'm like, guys, that's less than the lot value. What are you talking about? I mean, come on. I mean, at some point, this is crazy.
But also, like, who cares if it goes a little lower, right? Like, that's what I tell them too. I'm like, if you're happy with this price, you're holding on to it, right? Or it cash flows, right? Like, just, it's fine. You know, Ken always says this and it's true. It's not like gambling. You're not trying to hit the very bottom and then sell at the very top. Because if you sell at the top, you have to buy at the top. So it's like, you know, it's just an all,
that's a good call.
You know, but it's a lot of mental gymnastics right now because buyers think that it's 2008 and sellers think that it's 2021 and it's just trying to make them meet in the middle.
We can meet in the middle. That's a good analogy. Yeah, sellers think it's 21 and buyers think it's 08. That's not a good combination. Yeah, one of the things that I'm trying to get people to realize is, let's say for a minute, for whatever reason, I don't believe this, but I'm just going to put it out there. You think housing is going to go down 20% in your market, whether that market is Phoenix or Miami or Detroit, whatever, wherever you are. You know what I would tell a seller or a buyer? A buyer. I would say, you know what? Every offer we write should be 20% below list. Let's just start doing it now. To your point, if you do it now when there's no competition, you have much better chances. If you wait for this 20% drop, which may never happen, guess what the Fed's going to do? I mean, seriously, folks, if the national housing market goes down double digits, do you not think that'll catch the attention of the Federal Reserve? Do you not think that banks will start this 90-day forbearance period again? There is no chance the banks will allow an 08, foreclosure wave. We had like 3.2 million foreclosures in the last cycle. 10 million American households lost their homes. They're not letting that happen again. So to think that 08 on repeat is coming is so misguided. Financial institutions are just behaving differently.
But I also tell people too, like, okay, so I bought a home in 2023 and actually 2022, and it's down a little bit, right? But I've gotten, almost $100,000 in rent from that property. So you also have to calculate that. And if you're somebody that's, renting that wants to buy as a first time home buyer, every month you pay rent, you are now paying into something that could have been your house. So you do have to calculate that into your equation as you sit on the sidelines as well.
Yeah, and then the other thing, obviously Ken knows this, but the debt structure is entirely different on the residential side. Let's just say, for example, that the house you just bought the last 30 days, let's just say prices fell 50%. Can the bank come after you if you had a loan on it? Absolutely not. 30-year fix, they can't come after. Now, commercial debt service, debt coverage ratios and things of that nature, banks can ask for more capital, right? The loan structure is entirely different. So single family homes, residential financing is a superpower, right? People don't realize just how powerful that 30-year fixed rate mortgage is, right?
Yeah, and how almost nowhere in the world offers that except for the United States, and, when you're combating inflation, it's so great to have this set payment, and you can always refinance it lower as rates go down.
Yeah, I love that. Ken, we'll go to you here. I have a lot of people that follow me that agree that, the Class B and Class C pain is coming, extend, pretend. More deals like you talked about, 40 to 14 are going to be out there. What should people be doing to get ready? Should they be networking? Should they be, what are some advice you have to the person who wants to strike in the bigger stuff?
Oh, that's a great question. Well, first of all, we're doing a few things. First of all, you got to get your dry powder together, right? Like you got to start looking, you got to look at markets, you got to be talking to lenders. I got a call 2 days ago, actually, over the weekend, from a broker in San Antonio. Said he has 9 deals where the lender gave him the keys. That's the word he used.
Oh, wow.
And so you got to get on the phone and find these. I always think, okay, great. There's probably, there's 0 I'm probably going to buy, but it's worth the conversation, right?
Yeah, absolutely. Right.
And so that you got to be in the game. You got to be in the game. You got to be on the list. You got to be getting the emails, and that's free, by the way. So if you have a team, you're going to get those calls. And then every once in a while, there's going to be one that rises up, then you get real serious about it. But I think you got to look at hundreds of these deals. You got to be prepared to look at hundreds of these deals, and also know that when you find something that makes complete sense and it's simple, like really simple, then the money will
simpler the better. Yeah.
The money will be there. And yes, I think B and C are next. A's, we're already seeing some of the institutions come back out and look at A's again. I think this window's maybe a year. I think B's and C's are going to have a real problem next year. What we've done is we're working on dry powder, working on relationships. We're also dialing in our expenses, and really, because we have our in-house management company, we've been really, really focused on that and getting all that stuff in order. And then, we're out there looking to make sure, because we can cut deals with some of these lenders. You can actually, if you have the team, because you think about it, if you're a lender, the lender's saying, do I trust you to fix this? Right.
Right.
Because they're not financeable, right? They're not financeable.
No, they're not.
If they're broken beyond repair, they're not financeable. They're going to require money and time and a team and all that stuff. So you can get all that stuff together very, very easily. And I think we're heading into the period of time, because I went through this before, where you might not even need the money. Because if like I remember we bought a property in San Antonio in the last downturn. It was 50% vacant. It was 680 units. The lender is not, you cannot finance that. The lender, which was Bank of America at the time, financed it for us. So they're like, they don't have a choice. So now they're looking at, okay, who's on your team? Can you fix this? How long is it going to take? And so we're going into this really interesting time where the real estate is the prize, and it's not really as focused around equity and debt, in my opinion. And so if you can fix the bloodbath for other people, you're going to be in a fantastic position.
Yeah, and it's really funny. I had a similar experience with two, large for me, tiny for you, 18 and 10 unit buildings, where the bank contacted me and I bought directly from the bank because I own the properties next door. Yeah. And again, just like they financed the whole deal. The only thing I had to do for both was I had to put $50K in their bank as repair fund or escrows. And that was all I had to prove. And then I had a team, and it was some of the easiest deal and some of the best deals I've ever done. So that stuff's coming.
I believe it. And so in the old way, if people went to a syndication seminar, this is not the way they taught you, right? Like,
no, it's not the way.
Go get the debt, go get the equity, go open up your Rolodex, open all your friends' Rolodex and tell them how good a deal, even if, and they didn't even know what to look for. This is very different. This is, how do you work with a lender? How do you clean up, a property that has serious problems and vacancy problems and capital problems and, all those kinds of things. And I'll tell you, it's the most fun. It's what I did in 08, 9, 10, 11, 12, over and over and over and over.
Well, you guys have an event coming up July 31st, August 1st, Limitless Expo. This is a really fun time to put on an event like this, because again, you guys have been through this cycle. Both of you are operating at high levels in your unique areas. And you guys obviously have a tremendous following. How are you going to put on an event like Limitless Expo? What are the topics going to be? Who are the speakers? It's got to be a lot of fun, and you got to put it together.
I tell you what's been fantastic, Michael, is, I always look at what are the issues at hand today, right? New administration. We got tariff issues. We got immigration issues. We got manufacturing problems. We got inflation. We got interest rate issues. We got Fed issues. We got all those things. So I start there. I work backwards. Who are the best people that can talk about these things? So, and so the purpose of Limitless is, we have at this point thousands of investors in our deals. They always are investing in different things. They invest in single family. They invest in storage. They invest in office. They invest in land development. They invest in gold, silver, water, oil and gas and all that stuff, and crypto. So, things that I don't really have a lot of experience in. So we created this whole event to be able to have everything in one place, with the right people doing the right stuff. So nobody's selling anything. It's all pure education. So that's the rule. If you're on stage talking about oil and gas, you're not selling oil and gas. You're saying this is how you can lose money in oil and gas. So that's how we set it up 4 years ago. This year, it's all about all this other stuff. So who do we have? Really, we got Jim Rickards. We got Robert Kiyosaki. We got Jeff Snyder. We got George Gammon. We got Larry Lepard, who just wrote this great book called The Big Print. We've got all these incredible brains around on the economic side. We got, for the gold and silver, we got Mike Maloney. We got Dana Samuelson, and so I really literally hand selected people. We got Chris Martinson coming and talking about water rights and oil and gas and timber and and so obviously we got a bunch of real estate too, got a commercial panel, residential panel, a multifamily panel, a lender panel, got a manufacturing panel. I hand selected people that said, what's going on with the tariffs with your business? because some people are dead in the water, right? Because 100% of their business is out of China. So I work backwards, and we put up. So we have 50 speakers, 5 stages, and 2,000 people. It's really, really going to be fun. This is going to be a pivotal year for a lot of people, because some people are really in trouble, and some people are seeing this as real opportunity. So it's a very interesting year. I think 2025 is hopefully, everything's on the canvas, and everybody can pick it up from there.
Yeah, I think that's right. I've told people I think 2025 is the kind of last hard year. We're full of uncertainty. It's got to get better. By 2026, we're going to know where we are with the tax deal, the big beautiful bill, deregulation, depreciation, recapture, all that stuff, or bonus depreciation, excuse me. So 2026, I think will at least be clearer than 2025 for sure. Danielle, I'm curious. Go ahead.
I was going to say, if you guys are interested in getting tickets, it's at limitlessexpo.com, and you can use code KEN10 for 10% off.
Ooh, look at that. You get a discount.
I'm the marketer in this relationship. Yeah. So
it's giving away Ken's money. Give it away. Right? That's funny. That's awesome. Ken10, get that discount. Let's talk about residential, because I see a couple of interesting trends, Danielle, and I just love to get your insight on them. So over the last, let's call it 4 or 5 years, I think residential properties have gone through 2 evolutions. There was the time when everybody was burring, right? When rates were low and all of that. Then there was a time where Airbnb or short-term rentals were the it thing to do. It kind of feels like, to me, the next thing that everybody's going to be talking about is rent by room.
Yep.
I don't know if you're seeing that, but what are your thoughts on rent by room and all of that?
It's my same thoughts I had on Airbnb. So when everyone was doing Airbnb, I said, this is awesome as long as it cash flows as a long-term rental, because, the cities are, regulating them. And also, just who knows if everyone's always going to be traveling, and that market can get saturated. So I love rent by room. I think it's a great idea. It brings affordable housing to communities. But if it doesn't cash flow as a long-term, not single, just all in one rental, then you shouldn't do it, because we're seeing right now, that's our biggest distressed sellers that we're seeing right now in the Phoenix market, is people that paid too much money, bought an Airbnb, had a couple good years, or maybe they didn't because they bought it too late, and then it's not cash flowing at all, and it is a long-term rental. It doesn't work, and they are having to sell for major discounts because they're so underwater on their monthly payment.
So I think that is such wise advice.
Yeah, and I think rent by the room could be the same thing, right? Like, as much as cities say, oh, we love affordable housing and we love this, you're going to have parking issues. You're going to, it's funny because Ken's sister has been doing this in Washington long before it was on the internet, because Seattle is expensive. So she has always been buying houses and renting them by the room to young professionals. And I was chatting with her, and she's like, you need to make sure you have a big parking lot, and you need to, there's all these things you need to make sure. Well, I can tell you, in the Phoenix market, in most places that I've seen, you don't have parking lots. You have just a driveway and then a street. And I know how neighbors feel about tons of cars all over the road. So there definitely is something where this could be regulated. So if you're not running the numbers as a normal long-term rental, then you could be the next one holding the bag if these numbers don't work.
Yeah, no, I think that is such wise advice, and exactly what I would tell folks is you got to have a plan B. You got to have a worst case scenario. Otherwise, you're going to be selling at a significant discount, and you're going to be the one taking the haircut, which is not fun. So Ken, I'm curious, obviously we're still sitting in the muck and mire of tariffs, uncertainty. We've got one trade deal done with the UK. I don't think we have a second one done yet. But, we got the Elon Musk, Trump, kerfuffle going on. What's the average American, average investor to think right now, just given the level of uncertainty out there? What are you telling folks?
Yeah, well, I think at the end of the day, I think most people believe that this is going to be somewhat inflationary, like however it lands, right? It's going to be hard to figure out all the pieces. And I can't disagree with that, right? So I think that one of the things that that's why we are really focusing on buying existing assets under replacement costs, right?
Mhm.
On the other side of that, interestingly enough, we're also breaking ground on some stuff, right? In the
Really? You're
yeah,
building
in the
now. Wow.
anticipation of opening them in 27, 28. You know,
Okay.
so and so you know, now I could be wrong, but I don't think I'm going to be wrong, because if you take a look at the
There's a
supply
chart of
drop off,
builds. Yeah.
yeah,
Yeah.
yeah, like all of a sudden, you know, we're going to start to see rent growth in late 26, all of 27. We're going to be
Yeah.
opening projects at the right time. Also, you know, we've been building through all these cycles personally, and we have our own in-house GC. You know, we're a
Okay.
builder. But one of the things that happened was when rates went up, all of a sudden, all these subcontractors are calling us and say, we need the work, we need
Yeah.
the work, we need the work.
Need
So
the
all of a
work. Need
sudden,
the
my
work.
costs were going down, right? So my plumbing
Yeah.
cost, my electric cost, mechanical, you know, the earthwork, all that stuff, you know, all those people were so busy, well, where they were driving costs up because they had so much work. It's now gone the other way. So there's, you know, it seems counterintuitive to a lot of people, but we're believe it or not, we're building for less, even though interest rates are higher. We're building for
Sure.
less in the anticipation of opening later. So there's a couple strategies that we've got going right now.
All right, I like that. Well, let's stay on the new construction side. Go back to Daniil again. Daniil, not only a lot of rent by room, but ADUs are still taking off. I'm curious, what are your thoughts on? Let's. I don't know if Phoenix does them. I'm sorry, I don't know. But what have you thought about adding a little ADU in the back, or other cities like Seattle do, and stuff like that?
Well, what's interesting about Phoenix is that the governor did pass something probably over a year ago that said any home can put an ADU, you know,
Okay.
but none of the cities are permitting them.
Oh, small
So,
details. Small
yeah,
details.
just a small little glitch
Yeah.
there. So
Optics. It's
I
all about optics.
I think that it would be great, you know, if
Wow.
people could, you know, cash flow their properties by having an ADU and make homes more affordable. But, you know, as of right now, it's just not getting permitted in our state. But I know that it's popular in the Northwest. It's popular in Idaho.
Yep.
It's popular in Washington. You know, I think it can be a really great addition. But, you know, NIMBY, people don't like them. People don't want to live by one, you know, all of that good stuff.
Yeah, it's you know, anywhere you can get more affordable housing, and you know, a smaller ADU in the backyard is a great idea. Should the footprint allow it, right? You don't want the footprint to not work. But I think there's
Right.
just so much going on in 2025. If we kind of wrap this up, Daniil, what let's talk to the first time home buyer, because I think the
Mhm.
first time home buyer is probably scared. They're
Mhm.
probably nervous. They've probably been saving money for years for their down
Yep.
payment. And I think, like you said earlier, now's the time to get greedy, aggressive, write
Mhm.
those offers.
Yep.
But I don't think they think like that. What would you tell a first time home buyer? How would you cancel them if they're on the phone with you?
Well, I would say be really careful when you pick your realtor. I think that's a really big deal because they really need to understand the market. And also, you
I
know,
like
you
it.
want fixed rate debt. Like if your realtor is trying to convince you to take a short term loan that's going to be adjustable, next, right? Like terrible idea.
Next.
If you're buying a new home and the builder is going to buy down the rate for a year or two, next, unless you can afford it when it resets. If you can afford it when it resets,
Mhm.
then maybe that's fine. But you know, you don't want to get yourself into something that you can't handle long term. But to your point as
Yes.
well, now is a great time to negotiate. There's never an offer that's disrespectful. If your realtor is telling you that, then find another one, because right now in my brokerage, we are
Amen.
seeing offers that you would never believe would be accepted. So, you know, I'd
So
say just
hold on. Let's
go
put
for
some
it.
let's put some numbers on that, because I love that you said that, but people are going to hear that, and what they're going to translate it as is 5%. You and I both know 5%
Mhm.
discount is nothing. What
Yep.
are some of the discounts that you've seen sellers say yes to?
We just had one on our brokerage. It was listed for 650 grand. It had been sitting for like 80 some days, and the
Love it.
people made an offer of 580 and it got accepted. Now they made an
So
offer
that's,
of
let's call it 10%.
yep, and they made an offer
10%.
of 5
Okay.
580, and said, you can sit on this for a couple weeks, like just sit on
Yeah.
this and just let us know. But in a couple weeks, we have to make a decision. You always want to make an offer with an end date. You never want to just make an
Yes.
open offer, like forever and ever, just let me know, I'll be here. Right. So you make a reason that there's an end date, and then you see,
Mhm.
what they say. And this property had been lowered a few times. So at 650, it really wasn't even a bad deal, but they just weren't getting traction because also what sellers do is they list too high and then they slowly bring it down. So then it's on the market for all these days and people, aren't looking anymore that far out. So, it was kind of a mismatch, but they got a great deal on this property and it was within their budget. And to your point, if you want to wait for the prices to go down, just offer what you think they're going to go down to and just see.
No, that's exactly the move I would be telling buyers today. Again, if you're convinced in your bones or your next door neighbor's dog walker told you that homes are going to crash, just write the offer now. Compete, go out there when inventory is building, days on market are getting longer. You want to be busy in a buyer's market. It's lots of offers and it's lots of follow-up. I'm sorry, doing work and getting rich is hard. I'm sorry, but just do the work. I mean, geez, stop crying and whining. Write lots of offers.
I just want to mention one thing, Michael. I think it's a really interesting point that's different this time around than 08. This time around, the people are sitting on a lot of equity. So,
correct.
And I think in 08, they weren't, right? And so, now you've got a lot of equity sitting there. So, they're looking at, I don't know how much equity, maybe they got a couple $100,000 of equity here. So they're like, you know what? We're good. Like, that's a huge difference from a seller standpoint to be able to say, okay, you know what, let's just move on. Let's take the money and do something else with it. That is, I think a lot of times people forget that the buyer, the seller is in a very good, most of them are in a very good financial position at this time in the cycle.
Yeah.
And also if a home's vacant, right? I mean, I always say that when I'm touring with people, like if a home's vacant, you can make a lower offer because they're paying 2 mortgages, like it matters, they want this off their books. If they're living there, if it takes 3 more months to sell, what do they care, right? But if they're not living there, it's all an expense.
Yeah.
And I think too that these realtors that have been in it for like 5 years or so and have just went through 2020, their advice of that's a disrespectful offer. We can't do that. We don't want to offend the seller. I don't want to offend the realtor. I mean, you hear all these weird things where it's they're not going to take that. And the truth is that your realtor just doesn't want to write the offer because it takes time on their hands and it may or may not get accepted. But really, you just keep throwing offers out and also revisit an offer. You make an offer to somebody and then they say no, and then it sits for 90 days. Make another offer. You know what I mean? Because they just might accept it.
Yeah, I got to tell you, I've been through this. This is the second time through the cycle, and I never had one of my disrespectful offers accepted the first time. It's always the second, third, sometimes sixth follow-up, right? Because again, I just put them on the list and track them. People don't realize sellers only have 3 options. Option 1, they could take it off the market. Option 2, they could sell it to someone else. Or option 3, they're going to sell it to me. Those are the only 3 options. And as long as it's listed, it's only going to be option 2 or option 3. So as long as you stay in front of them, you have your chances go much, much higher. So be aggressive, folks. That's what I would tell people to do today. Get a deal of a decade or a deal of a lifetime. So Ken, if we close it out with you and we think about the people playing in the big place, what's kind of closing thoughts for them? Do you think they should just look at the charts like you are going, look at this drop off? It's about having inventory in 27, 28. It's about building now, getting ready for the couple years where there's just this huge air pocket. How do you coach someone who hasn't been through the cycle before? Because clearly you got the scars, question. You know how this goes.
Well, I think there's a few things. One, I think that people can't argue with the fact that we're heading toward what would be in a renter nation, right? We are heading into a situation where people can't afford homes. And unless there's a price drop on the homes, which we are seeing some softness, and there's this fairly significant reduction in interest rates, we're a long way from where rents are. So,
Yep.
so that's pushing a lot of people onto that side. So what does that do? What that does is it pushes a tremendous amount of pressure on the renter, because you've got all these people moving over to the renter side, and that's definitely happening. So if you're going to invest in any way, this is a market that's coming, and we're at the very beginning, in my opinion. And last I looked, we were like 65% home ownership, call it 35%
roughly
renter, somewhere in there. We've been as high as 69% home ownership, and we've been as low as 62. And so we're clicking down. We're clicking to 64, 63, 62. And I actually have made a prediction. I actually think we're going to get into the 50s for the first time ever, which would not be good.
I
so
agree.
basically means that if you're in the game on the real estate ownership side, it's gold, because you've now got an asset that's gonna, so that's number one. Number two is, I also believe that we're going to see inflation. The Fed's looking like they're going to even ratchet their 2% number up even more, which would be very interesting. So, so what they're basically saying is, we're not going to hit 2. we need to adjust it a little bit. And that's going to be their target. That essentially means that they've charted inflation in for the next 10 years is at least 20 to 30% for sure. So, so when you start to look at that, this is precisely why whatever you owned 10 years ago seems like a bargain, right? So it's hard to wrap your head around, but if you're at 2025 today and you're at 2035, which all of us hope that we'll still be here, there's really no different than going back to 2015 and taking a look. And so, it's true. Just sometimes it's hard to look forward. So you gotta put your stake in the ground, get the fixed rate debt, and let inflation do its thing, and let the renter nation do its thing. I'm telling you, you're going to see cash flow. You're going to see appreciation. The renters are going to pay off your debt. And the real estate, you just go on vacation. Just, let this administration inflate the heck out of it. Things are going to be more expensive. So I'm saying, just get in the game and or go in the stock market or go into cash, and I think that's a lot more risky.
Yeah. Inflation is a feature, not a bug. And if the Fed is truly going to raise their target to 2.5 from 2, or 3 from 2, that's 50% move, right? And you do that over a decade. That's pretty wild. So let's highlight limitlessexpo.com, the Ken 10, the discount again to save some money. Why should people go there right now and buy their tickets?
Well, 100%, because look at the uncertainty we all have, right? So if you want to be in the room with people that are going through what you're going through, maybe you have questions, maybe you've never invested before, maybe you're getting slaughtered in something that you're already in, maybe you're confused about what you want to do next. All that is going to be there, and no selling from stage, by the way, 0. It's 100% education. The interesting thing, Michael, is a lot of times these are speakers a lot of people don't know. I did the opposite. I'm like, I don't really want a big name speaker that's just going to sell tickets, and they come in and they motivate everybody and then they roll out. These are real people. These are real people doing real deals. These are real people in the trenches, and they're they're going to be speaking about what they're working on, what they see. So and not everyone agrees, which is going to be awesome.
I also think
I love that.
The networking aspect too. I'm a newer investor, and I meet so many people that open my eyes to so many different ideas and creative ways to attain property and run property. So I really think, as a newer investor, just to be in the room and make these connections with people, it's always about who you know.
I'll tell you a real nugget that came from me. By the way, it's my event, but last year I learned about investing in billboards. So now you don't think about these. You just drive down the road and there they are, right? But somebody owns them. They're 40, 50-year leases. Now I bought 2, and I just put another deal in escrow for 6 more. And guess what you get, Michael? Bonus depreciation.
No idea. Oh, my goodness. Of course you do.
Yeah, it's equipment.
Of course
it's equipment.
Yeah, exactly. So it's equipment.
Yeah, so I'm exiting. So by the way, this is at Limitless, right? So I'm like, of course it makes sense.
That's awesome.
The guy's like,
of course it makes sense.
And I'm like, so when I go, when I sell stuff and I have a capital gain, they're like, yeah,
Exactly. You go
you
buy
can
one.
put it into a billboard and get the write-off, even if you finance it. So, it's crazy. So anyway, so what happens
That's
is
awesome.
if you're open and
Mhm.
you're going with real stuff that's going on, you say, this is what I got going on. And all of a sudden you're going to realize that, oh, somebody comes from this angle and they're like,
Mm.
oh, okay, billboards. Oh, how about this? How about this? How about this? Everybody's doing these very cool things, and they have their little
Yeah.
niches. And anyway, so this year I put that kid up. He's going to do a billboard panel on
Nice.
our niche real estate category. And I just really think it's going to be, that's the purpose of these, is like, we all know what we know, but sometimes you
Yeah.
got to look outside of your lane and just consider other things.
LimitlessExpo.com, Ken 10, 3,000 investors. Again, I think you're right, Daniil. The audience is going to be equally important. Local networking partners, see what's going on. And again, Ken's got the ability to pick the best of the best. Guys, thank you so much for being here. We appreciate you. And shout out your own podcast and your own channel. What is it?
Yep. Ken McElroy Official, the Ken McElroy podcast. Just go check it out at kenmcelroy.com.
Awesome. Thank you so much.